Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 2nd of February. I'm Daniel Lam, your host for the podcast. It is safe to say that January was the month of gold, when it went all the way up from low 4,000s to mid 5,000s level. But it has since met some resistance, and the candlestick aficionado in me, reading the intraday movement in gold, concludes that gold is entering a period of tug-of-war between the bulls and the bears, where there is a chance of gold pulling back to the 4,800 level, which would give solid adding opportunities. This is because there is an emergence of a new world order and escalating geopolitical uncertainties. Trump's indifference to the dollar's decline to a 4-year low and continued concerns about the Fed's independence have intensified gold's rally. Recent U.S. actions in Venezuela and disputes within NATO over Greenland highlight a reconfiguration of the post-World War II global order. This was reflected in Mark Carney's speech at Davos and in new global alliances. For example, the EU announcing a free trade agreement with India after 2 decades of stop-start negotiations. Now, in the medium term, gold's rally has been underpinned by robust demand from EM central banks seeking to diversify away from the dollar. This trend is likely to persist as EM central banks investigate gold-backed digital currencies. Investor demand provided further impetus to gold's rally last year. Global gold demand surpassed a record 5,000 tons in 2025, led by the second largest ever rise in gold ETF holdings and barring corn purchases accelerating to a 12-year high. Meanwhile, gold supply rose only by 1%. All in all, yes, there is volatility ahead in gold, and you can see sudden pullback as we have witnessed the sharp spikes as well. Now, technical indicators and investor positioning suggest the rally in gold may be overextended, leading to chances of a near-term pullback. This would present opportunities for the medium to long-term investors because gold is on a medium and long-term uptrend. Those underweight in gold could consider increasing exposure during pullbacks, and our suggestion for a balanced portfolio is around 6% in gold. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.